Good morning, good afternoon, good evening, wherever you are. I'm your host, FD for Sage5.tv, and welcome to our channel. In this video, we are going to be looking at some of the tools, the best tools, that is, and frameworks for measuring blockchain decentralization. And we are going to be applying some of those tools to maybe one of your favorite crypto projects. You are talking of the likes of Ethereum, Bitcoin, Cardano, Solana, Tron Network, XRP, Avalanche, and maybe Binance Chain as well. We're going to try and make this video short, otherwise it's going to be a long video. But if you do want a dedicated section for your favorite coin, do let us know in the comment section, because we've got some videos prepared for some of these blockchain networks, focusing on that blockchain network. I think we are using the Nakamoto coefficient. But before I jump into this video, guys, please know that I am not a financial advisor. What I'm going to share with you are just my own opinions. It's not financial advice. Please do your own research and read further. Listen to other opinion leaders within this space, especially about this measuring of blockchain decentralization, because it's not black and white, and there are different tools, and it's going to be down to A, what tool you are familiar with, and B, which one favors your blockchain, because the results from different tools are different as well, which means you may find that something that comes on top using Nakamoto coefficient might falter when it comes to, say, the HHI index. Okay, so that's what we're going to be covering in this video. So guys, please always do your own research, and if you're from the UK, please know that I am not targeting you guys. You need to do your own research separately. You want more information about the guidance from the authorities, do visit the FCA website and see what they are talking about and how they call cryptocurrency space extremely risky, which means you may end up losing your funds. So coming back to measuring the decentralization of blockchain networks, which in its own right is very complex, this is down to decentralization having multiple dimensions, including node distribution, governance, token distribution, and network resilience. Several tools and frameworks help quantify decentralization across these aspects. The best one depends on the specific metric you want to assess, and obviously which one is more positive or sheds a positive light towards your favorite network or blockchain network. So let's look at some of these key tools and frameworks for measuring blockchain decentralization then. And the most popular one, I think you may know already, is the Nakamoto coefficient, which is best for overall decentralization. Nakamoto coefficient refers to the minimum number of entities that control at least 51% of a given resource. For example, mining power, staking, and validators, for example. And use case for the Nakamoto coefficient include helping to determine the level of resistance to centralization and collusion. And it can be used for custom calculation scripts. And to work out Nakamoto coefficient, you can use some custom calculation scripts, some blockchain explorers, for example, Solana Compass for Solana, and so forth. So that is on Nakamoto coefficient. Obviously, there will be more. I'll leave some links, take you to some of these resources. The second one, here you got to, forgive me if I'm butchering this, I think it's got to be German. It's Hirschman index, or HAI index, which is what I'm going to refer to it from this moment on, because it's just embarrassing the way I'm pronouncing it. And it is best for validator and mining pool distribution, or for measuring those. The HAI index is a measure of concentration used in economics, calculated as the sum of the squares of the market share of each entity. It can be used to help determine how power is distributed among miners, stakers, or validators. And it can be calculated using blockchain explorer data and Excel or Python scripts. Okay, that's why I said this might not be your cup of tea, but stay on, because the interesting part or the exciting part is coming somewhere in the video. So keep watching. And the third tool that we are going to be looking at is the Gini coefficient, GINI, and it is best for wealth and token distribution. It is a measure of inequality where 0 represents perfect equality and 1 represents total inequality. That's the Gini coefficient. And its use is to help us evaluate token distribution fairness among participants. And tools you can use to calculate this, you can use Python, you can use blockchain analytics tools such as Dune Analytics. The fourth tool or framework we're going to be looking at is the Shannon entropy, best for network diversity. Shannon entropy measures the randomness of a system used to assess decentralization across node operators. It can be used to assess how evenly validators are spread across different node operators. And tools you can use to calculate the Shannon entropy include Python scripts, blockchain analytics, APIs, and so forth. Obviously, some guys in the know will have different tools that they can use to calculate this. In fifth, we've got decentralization ratio, or what's known as the D ratio, best for combined analysis. It is a comprehensive approach that considers node distribution, governance control, and economic factors. And it can be used to help us in creating a weighted score for blockchain decentralization. To calculate the D ratio, you can use research-based models, blockchain-specific implementations, and so forth. We'll try and leave some examples in the comment section as well. Like I said, this is not for everybody, this video, but it's quite fascinating, especially the result of our application when you get towards the end of the video. The sixth tool or framework we're going to be using for calculating calculating how decentralization, some of your favorite crypto blockchain networks is using blockchain explorers and analytic platform, which obviously gives you best real data available, because the data is actually real, because you're using real data here. You're talking about the likes of Etherscan, SoulScan, Cardano Explorer, Network Node, and Validator tracking, June Analytics, Nansen, Messari, June Analytics, Nansen, and Messari. You can use this for on-chain analysis and token distribution. Glassnode into the block. You can use this for market and staking decentralization insights. And finally, in seventh, you got the Decentralization Index by Messari. It's best used for standardized scoring. It is a formalized metric by Messari, a research firm within the crypto space that scores networks based on validator count, node operators, economic distribution, and so forth. This is ideal for comparing different blockchains. So if you want to compare certain blockchains, whether, for example, Solana and Ethereum, which one is more decentralized, you can use the Messari Decentralization Index. And Messari do most of these things for you. So if you are subscribed, which means it's a paid service, you will be able to access the Messari research reports, which I think they publish on a periodic basis. So if you are looking for a single framework, the Nakamoto coefficient is the most widely used and practical. However, for a more complete analysis, I would recommend combining the Nakamoto coefficient, the HHI index, the Gini coefficient, and the Shannon entropy, which then means you'll get something that is well-rounded and give you a better view of whether a blockchain network is very much decentralized. I hope you're still with me. But the next part is the exciting part. So, as we just said, if you combine all the other tools or frameworks, it will give you a better score or a better analysis of whether a blockchain is adequately decentralized. And the one that does it for me, or that I've picked to do this, I've taken the decentralization ratio, the D ratio assessment for blockchain networks. The decentralization ratio is a comprehensive metric that evaluates blockchain decentralization by considering multiple factors, including Nakamoto coefficient, which is all about resistance to central control, the HHI index, which is good for assessing validator and mining pool concentration, the Gini coefficient, which is good for assessing token and wealth distribution, as well as the Shannon entropy, which is good for assessing network diversity of nodes and validators. That's my rationale why I've chosen the D ratio. And the formula, I'll put it here on the screen so you can see the formula we used when we were calculating this. And obviously it's got ranges where it got a range. If the D ratio is equal or greater to 0.8, means the network is highly decentralized. If it's from 0.5 to just under 0.8, moderately decentralized. If the D ratio is less than 0.5, it is highly centralized. So that's what we're going to be covering now. So let's start with Bitcoin then. Bitcoin has got a ratio of 0.68 to 0.75, which means it's moderately decentralized. I'm sure Bitcoin maxis will be up in arms saying you don't know nothing, Bitcoin has been tested and so forth. But decentralization is not an instant. It's kind of a range, and it's a living range. But that certain factors can combine to give you a set of circumstances that would then qualify a blockchain network as decentralized at any point in time, or moderately decentralized, or even centralized. So as you will see with Bitcoin, it has a relatively high Nakamoto coefficient, but high wealth concentration among holders. That is what then knocks it off. Become a moderately decentralized network. You can't argue with that. If you believe that Bitcoin is math, then this D ratio is also math. So are you going to choose which math you're going to agree with and which math you're not going to agree with? Come on. It can't be as basic as that, okay? If we got principles that we want to stick to, we got to apply those principles across the board with no bias. And this is where we get to. So Bitcoin, according to the D ratio, is moderately decentralized because of wealth concentration among holders. A small number holds the majority of Bitcoin, which means that's where the wealth is concentrated. Next, you got Ethereum, which ranges from 0.72 to 0.80. Again, that puts Ethereum within the moderately to highly decentralized. So Ethereum, in actual fact, is slightly more decentralized than Bitcoin. I know people are throwing their knives and spears and, the virtual spears and knives at me, but you got to look at the math. Math says Ethereum is moderately to highly decentralized compared to Bitcoin's moderately decentralized status. Ethereum staking adds more decentralization, but dominant staking pulls centralized control. Yeah, if you are looking at, say, the Nakamoto coefficient or some of the HII index, you'll probably find that Ethereum will be lower down the ranks. Why? Because of some of the protocols that are used for staking Ethereum, which means power is centralized within those protocols. But that will be a different tool. For the D ratio, Ethereum has got a range of 0.72 to 0.80, which classifies Ethereum as moderately to highly decentralized and a little more decentralized than Bitcoin. That's not going to be popular, I know. Next, let's look at Ripple XRP. It's got a ratio of 0.30 or 0.4, which means it's highly centralized. You can check our range as well. It means Ripple is highly centralized. Don't think, most people who are in the know, I don't think you needed the deal ratio to tell you that. The XRP ledger is controlled by a few validators and Ripple labs, making it among the least decentralized networks. I agree with that, okay? Next, you got Binance Chain, which has got a ratio of 0.28 to 0.38, which also means it's highly centralized. Binance Chain only has 21 validators. If that's inaccurate, guys, let me know in the comment section. And it's mostly Binance associated, which means they are insiders who are the validators for Binance. They run the network, leading to extreme centralization. Next, let's move on to Solana, which has got a ratio or a range of 0.65 to 0.72. Moderately decentralized, just like Bitcoin. Bitcoin maxis are not going to like this, are they? Solana is a high Nakamoto coefficient, but is still stake concentrated among a few players. Like I said, the model, it depends which model you use. The deal ratio for me, I like it because it combines all the other 4 models or tools. Okay, so Solana is moderately decentralized, just below Ethereum and within the same range as Bitcoin. Next, you got Cardano. Cardano ranges from 0.78 to 0.85, which means it's highly decentralized. Highly decentralized Cardano is. Cardano's large staking pool count and well-distributed network contribute to one of the highest deal ratios. Okay, that's not going to be popular, but you know, Cardano is actually, if you want to put it in blunt terms, is most likely a better version of Bitcoin, just that the tokenomics suck and it's not as popular as well. But I think from the underpinning science, probably Cardano is better designed than Bitcoin. That's just my own opinion, of course. It's not from any advice. I'm not knocking Bitcoin, because Bitcoin benefited from network effects, and if you are a maxi, you could turn on and say there was no issuance, but then Bitcoin is an issuance that was logged, was mining, but a debate for another day. Okay? Cardano's large staking count and well-distributed network contribute to one of the highest deal ratios. Next, you got Avalanche. Range is 0.62 to 0.7, which means it's moderately decentralized. And this is down to validator diversity, which is improving, but staking concentration remains a limiting factor. Tron, we had to include it because it's still in the top 15 or something like that. The range for Tron network is 0.25 to 0.35. It's probably one of the lowest. It is highly centralized. Tron's 27 super representatives control network governance, leading to extreme centralization. And we had to include Sui because it's one of the new and upcoming new kids on the block, isn't it? The range for Sui is 0.58 to 0.66, which means it's moderately decentralized. Sui is still growing its validator count, but centralization among early investors reduces its overall deal ratio. So there you have it, folks. My final thoughts on this is, don't take this assessment as final. This is just my own take based on the tool that I thought will give me a rounded view of how decentralized some of our favorite networks are, including the big daddy, which is Bitcoin. And this assessment provides a holistic measure of blockchain decentralization by incorporating key factors into a single deal ratio score. Networks with a higher deal ratio exhibit greater decentralization, while those with a lower score are more centralized and controlled by fewer entities. And as you can tell, the only highly decentralized within this exercise that we just performed in this video was Cardano, followed by Ethereum, and then you got Bitcoin, Solana, Sui, and Avalanche. They are in the same category. The rest are all centralized. I want to know from you though, what are your thoughts? What do you think about this assessment we just shared with you guys in this video? Do you think it does a good job on assessing the likes of Bitcoin? Yeah, it is still, Bitcoin is still, I think it's actually getting more and more centralized if you want to apply science to decentralization, because of the big players coming in. They are buying most of the Bitcoin and stuff like that. That means the wealth is concentrated within a few hands, as well as the early participants, of course. What are your thoughts? Let me know in the comment section, guys. Until the next one, this is FD for Sage5.tv signing out for now. Bye.